Live from Bloomberg's World Headquarters in New York and from our studios in Washington, D.C., I'm Kailey Leinz along with Matt Miller. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, SEC Chair Gary Gensler tells the Senate that crypto is rife with fraud and misconduct. He says that claims that the U.S. lacks rules for crypto are false. We will talk about crypto regulation with Kristin Smith, the CEO of the Blockchain Association, who says Congress must act now. And the collapse of FTX certainly increased skepticism around the industry. We discuss a new book that details the rise and pitfalls of crypto.
All right, Kailey, that's all ahead. First off, let's get a snapshot of what's going on in these crypto markets in terms of price action. It is a risk-on day across assets, and that certainly holds true for Bitcoin as well. Right now, up 1.5%, firmly over $26,000 at $26,625. We also see Ether rising even more right now, almost 2% the gain for ETH at $1,634.23. And then I put Tron and Bitcoin Cash in here because if you look at our crypto home screen, CRYP Go on the Bloomberg terminal, of all of the coins we list, these are the only two that are trading substantially above their 30-day average. So right now, Tron up more than 2.5% at 8.3 cents, and its 30-day average is more like 7.5 cents. Bitcoin Cash right now up almost 5%, trading at 208.75. Kailey?
All right, Matt, so really interesting to look at the price action today. And of course, a lot of the price action as of late has been driven by optimism or the lack thereof around the regulatory picture here in the U.S. And on that note, SEC Chair Gary Gensler continues to sow doubts about the crypto industry as his team reviews dozens of spot Bitcoin ETF applications. On Tuesday, he testified before the Senate Banking Committee and said the space is rife with bad actors. I spoke with a number of members of that committee about their feelings on Gensler's actions and crypto regulation more broadly.
We have a lot of companies that make a lot of money by not having tough oversight. The SEC has exactly one job, and that is to protect investors.
There is no legislative framework, so the SEC is freelancing on this. They're regulating by enforcement action, which is exactly the wrong approach.
It's clear that there are people here that are in the pockets of the crypto crowd, and they haven't shown a real public purpose. We know that in many cases, crypto is used for money laundering, for bringing drugs and trafficking, and there needs to be strong rules about that before they open up crypto in a way that's going to hurt the public.
We're seeing a weaponization of the SEC. The SEC should really try to create certainty in the marketplace rather than what they're doing is creating massive uncertainty.
Joining us now to continue this conversation, Kristin Smith, the CEO of the Blockchain Association. She is here in our Washington, D.C. studio, back in Washington, along with both the Senate and the House of Representatives. Obviously, before the August recess, when they all left, the House Financial Services Committee out of committee advanced two bills, one related to market structure, one related to stablecoins. Still an open question as to whether that makes it through the full House, but do they even stand a chance in the Senate?
Yeah, no, Kailey, I think, one, it's great to be back here. But no, I think, listen, legislation is needed. I think we saw a couple of the senators earlier say the SEC has full authority. It's clear that they don't. And as we've seen throughout the summer, there have been multiple court cases, Ripple, Grayscale, and even Uniswap in a class action lawsuit that basically says that these assets are not always securities, and therefore the SEC doesn't have a role to play. But we do want to have some regulation of the crypto markets. And in order to do so, like Senator Lummis said a couple days ago, is that you have to have legislation in place that puts that framework there. And so I think that the work that is going on in the House right now is incredibly important. Legislation isn't a process that happens overnight. It takes time. And I think that the Chairman McHenry and Chairman Thompson of the two committees are working very hard. Their staffs are working to improve this legislation. And so I'm hopeful and optimistic that we get an updated bill to the floor sometime this fall. And, if it doesn't happen this fall, then, we're going to keep working on this because over 50 million Americans own crypto assets. And let me tell you, they're not using it to commit illicit crimes using these assets. And so I think it's important we have that framework in place.
Yeah, alluding to the comments from the chairman of the Banking Committee, Sherrod Brown, who actually just released a letter that he wrote to the Treasury Department, the SEC, the CFTC, calling for boosted transparency in crypto. And you actually raised a number of those court cases. I asked him about them on Tuesday. I said, doesn't that indicate the SEC might be overstepping? He thinks they're Wall Street picked judges, was essentially what he told me. Do you sense, though, that there is a real change in the tenor of conversations you're having on the Hill in light of those court cases? Have they made a difference?
Yeah, no, I think it is starting to make a difference. I think for a long time, members of Congress sort of trusted the SEC and the chairman who said he had full authority over these assets. And listen, there's more to play out in the courts. I think in particular, the Coinbase case is going to be one that is very important for this space. And so we're watching that one very closely, working on amicus briefs to support that effort. But, I think that we really do need a legislative fix, because it is very clear that these things are not always securities. And it's very clear that the SEC just isn't doing the job that they need to do to give this industry a fair shake. And so, I'm very optimistic and very happy with the progress that we've seen. And it, long ways to go, but I think we're going to get there.
Yeah, I don't know that I could share that optimism, Kristin, because, even if you think that the SEC thinks that your cryptocurrency is a security, and so you try and register with the SEC, try and play by Gary Gensler's rules, what are the chances that they're going to allow you to go forward?
Well, I think we've seen that, for example, with the Bitcoin ETF situation. The courts have said that the SEC was arbitrary and capricious in their decision to deny those ETFs. And so the SEC is going to have to go back and do it. So what we're finding is the courts are keeping the agencies focused on their responsibilities of what they're supposed to be doing and what they're not supposed to be doing. And so I think the courts are really key in all of this, in holding off the agencies and showing to Congress that they really do need to step in and provide that clear pathway.
I also, I don't want to be disrespectful to Senator Sherrod Brown, number one, because he represents the great state of Ohio, but also he's obviously got a ton of experience and is a very intelligent man. On the other hand, why do especially these Democrats kind of fall back on that idea that crypto is used for buying drugs and laundering money, as if like the U.S. dollar doesn't already have position number one in terms of currencies used for buying drugs and laundering money? And how do you counter that?
Well, that's true. Yeah, no, it's a difficult argument to counter. I mean, what we're seeing right now and what we're hearing right now is senators are getting briefed in, intelligence briefings on the use of crypto and illicit finance. And we can't be in the room for those conversations to directly fight back. But the truth is that blockchains are incredibly transparent. We have lots of tools available, lots of companies that specialize in helping law enforcement chase down bad actors, and that if you're a criminal, like, crypto is not your number one place to go because of that transparency and because people are ultimately tracked down. And so I think we need to be focusing on the unique features of blockchains and making sure that we have enough resources in place so that law enforcement can use these tools, because, if you commit a crime with Bitcoin, somebody will eventually find you. These analytics are incredibly sophisticated. And so I think the more and more we educate about how this works, we're doing a bunch of demos on the Hill with different analytics companies to show members of Congress how this works. The more they come to understand this, the more they'll realize that you can't just take the old system that works in the financial services world for tracking illicit finance and attach it to crypto. It's just different. And if it's not done, if it's done in the way of the old world, it actually ends up exposing Americans' privacy and their transactions much more than we would see in the traditional space. So it's a lot of education, but the good news is we celebrated our 5th anniversary here at the Blockchain Association. We've got just this week, we've got a ton of member companies, over 100 folks that are working together to try to get all of this going. These companies have teams on the ground in Washington. So, we have the people in place to get the education done. We just have to go through meeting by meeting, one by one. And I think that if we do it correctly, we'll eventually have a turning point and be able to have more productive conversations on the policy front.
Of course, it's not just about what lawmakers on Capitol Hill are doing, even what the SEC is doing. There's other agencies that work in this space as well, including the IRS just a few weeks ago, unveiled some proposals that would require brokers to report sales, exchanges of digital assets this. What impact do you think that would have?
Yeah, we actually think that the proposed rules that Treasury put out, this is on their broker rulemaking for digital assets, are very destructive in the way that they were written. I think the good news is there is a public comment period, and our hope is that we will be able to change that. But what's going on with all of these agencies is they're used to regulating centralized entities, and crypto decentralizes, and there's not one single person in charge that has all of the information. And so for regulators, it's hard to figure out how to achieve their public policy mission when they don't have that intermediary. So they're trying to force intermediaries in a place where they don't exist. That's simply not going to work. And it's not going to work here. You know, if they do it incorrectly, we won't be having that innovation here in the U.S. because everyone around the world is building this already. There's a tremendous excitement in Asia this week. There's a big crypto conference that had over 1,000 people there in Singapore. People are building around the world, and the U.S. is going to want to be a part of this and not accidentally lock ourselves off of this opportunity to lead.
Kristin, great to have you on the program. Thanks so much for joining us in our Washington, D.C. bureau. Kristin Smith, their CEO of the Blockchain Association. Coming up, Meltem Demirors joins us to talk about Bitcoin moves and the plan to sell billions in crypto assets from FTX.
And of course, to access all the latest data and news on crypto, check out CRYP Go on the terminal. And outside of crypto, we are keeping a close eye on the first day of trading for ARM. That stock now north of $60, $60.87 and change, up about 20%. Remember, it IPO'd at 51. Quite a move. This is Bloomberg.
Whether it's about broker-dealers, whether it's about exchanges, whether it's about custody, we have taken up the path where we find it appropriate to put out the public comments and proposals. But there are laws, there are rules, not just here at the SEC, but across a number of areas. I think this is a field that a lot of it just wants to run past that and suggest otherwise.
And that was SEC Chair Gary Gensler speaking at a Better Markets event. Joining us to comment is Meltem Demirors, Chief Strategy Officer at CoinShares. And Meltem, really, to me, the most interesting thing is seeing the SEC lose a couple of times in really big cases against Ripple and against Grayscale. Plus, like the biggest asset manager in the world in BlackRock comes in to join the fray in terms of ETF filers. I would think things are looking up for Bitcoin, and yet we're still trading well under $30,000. Why aren't we off to the races?
That's the greatest question. Look, at CoinShares, we like to look at the data. Sentiment is expressed as flow in the market. And if we look at flows, I jokingly call it, the summer of apathy, the summer that we just had. Despite all of this great news, we did see flows into crypto structured product and a pop in Bitcoin when we saw the BlackRock news. But over the last month, we've seen $300 million in outflows. Last week, 70% less trading volume in publicly listed crypto products. And we're also down 30% in trading volume on the spot and derivatives side. That's summer of apathy with all of this uncertainty. There are dozens of ETF applications. There are obviously several big court cases. We've got a lot of noise in DC, but I don't know how much that noise will translate into action given we're going into an election year. There's just a lot of uncertainty. And right now what we're seeing is that summer of apathy has the potential to turn into our winter of discontent as we continue to see investors, traders, market makers sitting on the sidelines.
I also wonder, as we get closer to an election year, Meltem, we're starting to see a pretty clear divide among politicians and parties. Sherrod Brown saying that he thinks crypto is used for buying drugs and laundering money. Senator Lummis saying that she thinks we need to create a framework here. We can't regulate by enforcement. Do you see that clear delineation that Democrats are essentially against it and Republicans are for it?
I don't think it's really that clear cut, honestly, and I don't think this is necessarily a partisan issue. I actually think that on both sides of the aisle, we've seen a fairly nuanced approach, actually, which has been most surprising to me of all people. So I think it's a little bit more nuanced. I do think where both parties agree and where we're seeing a lot of agreement is that something needs to be done. I've been in this industry for almost a decade. I live in the United States. I've built multiple businesses dealing with crypto in the United States. I don't want to have to consider moving just because we can't get our stuff together on the policy side. So it's very clear that we need something cohesive, and it has to come from Congress, because it's clear that the alphabet soup of agencies simply is not going to agree. And again, I'm kind of scared to see how all of this is going to get untangled, because at this point, there's so many lawsuits, so many cases, so many different precedents being set. It's really going to take, this being a bipartisan effort, everyone coming together to get something done. And again, I'm not optimistic it will get done this session because we're running out the clock.
Well, Meltem, you talk about, working and building in the U.S., and we're hearing more and more that people just aren't doing it. They're building elsewhere, whether it's in Asia or in Europe. And I wonder, as you talk about apathy, is that just U.S. specific apathy? I mean, what does activity look like in these other jurisdictions where maybe things are a little bit more friendly?
Look, I wish it was just in the U.S. Unfortunately, we are seeing this kind of around the world. One of the biggest things we look at CoinShares, a big part of our business, is our trading business, which is not in the U.S., unfortunately. It's in Europe. And one of the interesting things we've seen with our counterparties, typically, our counterparties would trade 7 days a week, 24/7. I was joking with your studio earlier that, for them, tomorrow's Friday, end of the market week. In crypto, we're 24/7, 365. And so it's a little bit different. What we've actually seen is a lot of desks are going down to 5 days a week. Maybe instead of offering 24-hour coverage, they're cutting back to 12 hours, and then they have a smaller trading crew, after hours. So we are starting to see sort of compression in that schedule, and we just are starting to see less activity, whether it's in APAC, whether it's in Europe or in the States. So again, I think this apathy is sort of across the board. It's market makers and crypto natives, but it's also some of the macro funds who sort of started trading volatility, particularly in Bitcoin, Ether, and some of the larger market cap cryptocurrencies. And then again, there's this whole long tail of high risk, high volatility crypto assets that are also seeing really muted volatility, whereas in the past there'd be much more momentum, much more volume, much more liquidity. So across the board, I think we're seeing a lot less activity.
All right, CoinShares, Meltem, Demirors, certainly not apathetic on this program, even if it's apathetic everywhere else. Thank you very much for joining us, as always. Now, coming up, really excited for this one, Bloomberg's Zeke Fox joins us to discuss his new book, Number Go Up. This is Bloomberg.
The collapse of Sam Bankman-Fried's FTX sent shockwaves through the crypto market. In today's Big Take, Bloomberg took a look at his parents and their effect on his rise to stardom. Bankman-Fried is on the cover of a new book released this week, Number Go Up, Inside Crypto's Wild Rise and Staggering Fall. Bloomberg investigative reporter Zeke Fox is the author of the book and joins us now on set. He just signed my copy for me. Thanks very much for that, Zeke. Talk to me about, first, before we get to the parents and their story in the Big Take today, just what you did to write this book. I mean, you actually went down to the Bahamas and hung out with the executives, including SBF.
Yeah, well, it's kind of like surreal to be on this show now and to hear everybody talking about like Bitcoin and Ethereum and trading it. And because a couple years ago, all this stuff was just kind of like nonsense to me. And I was like, but I got totally sucked in. I went down the rabbit hole. And yeah, like 2 years later, I found myself in the Bahamas at SBF's $30 million penthouse with his exchange FTX in shambles and hearing his story of how it all went down.
Yeah, and Zeke, you say in the book at multiple times things he said to you and then that was a lie, or how you had like a full view of his computer. You were sitting right there next to him and even you couldn't tell what was really going down. How do you think he did it after spending all this time with him, knowing what we know now? How did he pull it off?
I mean, he just had such an appealing story, this idea that he was had only gotten rich so that he could give all his money away. And he created this great image as like the boy genius of crypto, the only honest guy. He was the darling of Wall Street, Silicon Valley, and Washington. But also part of it was like this crypto zone of like unreality. And nobody really stopped to ask like, wait, I mean, best case scenario, setting aside any potential fraud, this guy's basically running like an offshore casino in the Bahamas. Like, why are we celebrating him like he's, going to be the next future of Wall Street?
But as you say, he talked such a good game about, philanthropy and doing the right thing. And his parents, as we discovered in today's Big Take, are not only law professors, but like ethicists, right?
They're very impressive people. Like Barbara Fried, his mother, has written whole books about consequentialism and ethics. And he was raised into this like utilitarian philosophy, which means that every action you do should be judged by what will do the most good for the greatest number of people. And I really think that Sam believed in this stuff, and that's what led him to get so rich. Like, he really did want to give all his money away. But I also think it led him to dangerous places where he could justify taking crazy risks or doing unethical things if he thought that it would lead to something good in the future.
And Zeke, finally, we only have about 90 seconds left, but we should note this is not just a book about Sam Bankman-Fried and FTX. It is a crypto book. You cover a lot of ground, including NFTs, and specifically one NFT. Can you please just quickly tell us the Mutant Ape story, because it's hilarious?
I bought this Mutant Ape for $20,000, and that was my ticket to Ape Fest, a week-long party headlined by Snoop and Eminem. And the process of buying it was truly horrifying. I also went to Cambodia to investigate human trafficking, but buying the Bored Ape was like the scariest part of this whole book.
Insane. How much is it worth now?
It's down to maybe $5,000 or so, but I unloaded it.
Oh, okay.
Yeah.
Okay.
No, I was not holding on to that thing.
You got to read the book to find out. Absolutely. I mean, just fascinating stuff.
It absolutely is. I encourage everyone to go out, get a copy, and read it. Bloomberg's Zeke Fox. There's a whole load of other funny stories and tidbits in there. Really great writing. Really appreciate it. And Matt, it just goes to show you, Zeke said it, you can get sucked into the rabbit hole with this world pretty quickly.
Yeah, absolutely. I mean, it's a very large and complex story, and there's a lot of different ways you can go with it. There's a lot of different opinions about the industry as well, as we know very well. Coming up next week, Terrence Yang of Swan Bitcoin is going to join us on this program.
Looking forward to that. But first, let's get another check on the first day of trading for ARM. It IPO'd at 51. It's currently trading near 61, 60.84 as we speak. This is Bloomberg.